I'm Joan Dromey, and I'm the Senior VP and Product Manager for the Private Markets Group at Computershare. We are a stock transfer agent, which is a fancy way of saying that we keep the books and records for who owns stock in different companies. For quite a long time, we've done this for publicly held companies, companies like ExxonMobil and AT&T and Verizon and General Motors and Ford. A couple of years ago, we formed a private markets group to focus on privately held companies because we felt this was an emerging growth opportunity for us. And it's been an interesting ride in that time. Richard, you'll be proud to know that I feel good that the data analysis and projections that I did 2 years ago are actually coming true for us, which is reassuring. It's been very interesting in looking at the topic of this particular conference, which is State of Investing and Risk Mitigation. The privately held company world represents a different risk level for us. I think Patrick can tell you we have lots of fun doing our KYC duties on some of these companies. And as a fairly large organization, we operate in about 20 countries worldwide, and we're a $5 billion market cap company. We do have certain procedures and restrictions and all kinds of legal requirements on who we do business with. So we like to know who they are and what they're doing and what they're about. With emerging growth companies, that's a completely different ballgame. And some of the information that we routinely require from companies is sometimes in progress or simply not available. Legal opinions about securities are a good example of that. We generally require an opinion because we are going to be transferring ownership or title of investments from one person to another. We usually require a legal opinion that the securities were validly issued. Sometimes that's an onerous requirement for a privately held company, because I literally have had situations where the issuer will say, well, the attorney that did that when we did our Regulation D offering 12 years ago is dead now. So it would cost us $25,000 to go off and get another legal opinion. And many times that's money that the company's not got available to spend or isn't willing to spend on that type of an effort. So we do handle our privately held companies a bit differently than the publicly held ones. And in doing that, we're looking at risk, their risk and our risk. And so we look at, is the security tradable? Generally, it's not. Are there restrictions on the security? Usually there are. And that's another education process for our issuers, is what's required to remove restrictions from a security when you're SEC regulated. Sometimes companies that have been keeping their own records have been doing things in a, I would call it, not a completely compliant manner. So they come to people like us because we will help them be compliant and have good corporate governance and give transparency to both them and their investors. And it's an interesting ride for both sides, because I've had experiences where we'll bring in records and sometimes the investors on the books are not certified from an IRS perspective. And I have had conversations with CFOs who will say, but we know these people, they're certified. Well, they may be perfectly legitimate taxpayers, but if we don't have a W-9 on file, then we would have to withhold money from the dividend for that person. And that's a level of compliance that many private companies are simply unaccustomed to. So, as I said, it's an interesting ride on both sides. In the crowdfunding world, again, you have different levels of risk. As people move forward with this and you're looking at accredited investor verifications and taking in people who are investing in CF offerings that are only supposed to invest X percent of their earnings or their income, we are not generally conducting investor verifications. So to some degree, we look pretty closely at portals that we work with to make sure that they have good practices, because, as I think someone alluded to earlier, you see the situations with Lending Club where not everyone's been verified. And I've heard of other situations like that, where you're taking in records, you want to be able to rely on the integrity of those records and the validity of the information. Because as we move forward and crowdfunding grows, and it is growing, it's growing a bit slower than most people would like it to, but things are happening in that space. And as things continue to grow, keeping good standards of compliance and corporate governance is going to be very important to the legitimate players in this space. As I think Richard was saying, there's the example of someone wanting to provide the good housekeeping seal of approval. That's what everybody would like to have. Not everyone will be able to achieve that. And sometimes companies that are looking to raise funds may be willing to cut corners to get their funding. That's not necessarily going to be a good thing for any of us, particularly attorneys, accountants, and regulated players such as ourselves. But it would behoove all of us to try and keep to those standards, because that will make this a safer space for more investors to play in. And it will make us more attractive from a regulatory standpoint. I think what Computershare brings to the table for the investors and the issuers is there's a great degree of transparency. We have web portals for the issuer, for the investor, for the broker-dealers and advisors. So there's visibility into the investments and the value of the investments. That's actually one of the first things we instituted when we started this group, is being able to support valuation for privately held securities and publish that and make it available on investor statements and on the web portals. Because that type of information is really useful to the investors, and it's, let's call it, reassuring. You can go online and look and say, oh yes, my stock does have a value, and you can see how the value was derived, because there's the ability for the issuer to explain where the valuation came from and link to a valuation report or other information that they may have in support of that. And having those types of practices is going to be important as we move forward in this effort and more of these types of offerings get done. It's all a big learning experience. And I think the data that Richard provided is really instructive in that regard. And I do think, too, that we don't have a lot of experiential data so far. The more we get, the more we know, the more things will develop. One of the things that I see on my side is there's a great need for more issuer education and investor education. On the issuer side, a lot of entrepreneurs and CEOs or founders of emerging growth companies are so focused on their business that they don't know what types of regulatory obligations they may have. It's unfamiliar territory for them. So it's important to make good selections, whether it's the accounting firm, the law firm, or a service provider such as Computershare, because all of those things will help keep companies kind of on the straight and narrow and make the world a safer place for the investors to play in this space. And that's what I think all of us are trying to work towards. Anybody have questions about lovely things like DTC clearance and regulatory transfer of restricted shares, all the fun things?
So I'll ask a basic question. What are the key plumbing fixes that you're working on?
Key plumbing fixes. One of the key plumbing fixes was the private securities valuation. So for us, we normally source quotes from external providers such as Bloomberg. What we did was build an internal database where we can store the security valuation, the as of date that that valuation is pegged to, and up to 1,500 characters of explanation as to how you came up with the valuation. And that is something that when any of our web portals call in or any of our statement programs look at that information, if the company is coded as a privately held company, it looks first to that database, and it doesn't look to any external provider, because the shares for plenty of privately held companies trade on OTC or other ATS mechanisms. So you have private trades that are done and the information is publicly available. So having a database that our issuers use supersedes that information if they choose to provide the valuation. Some companies don't actually want to, but for those that do, that's one plumbing fix. DTC eligibility is another interesting, it was a little bit of a conundrum for us at one point. I can recall one of our senior executives saying to me, what do you mean we need to be able to sponsor DTC applications for private companies? They're private, why do they need to clear through DTC? But we do service a great many private banks, usually community banks, that some have done crowdfunding, some have not, but they want their securities to be able to clear through DTC. So that's sort of an interesting, neither fish nor fowl example. We've had a lot of conversation internally about how to classify private versus public. And we have that conversation with issuers and portals and other types of sometimes venture capital and private equity firms that are interested in not violating the 2,000 investor threshold and the mechanisms for tracking that and making sure that they don't fall out of compliance with that. In terms of sponsoring DTC participation, we've seen an uptick in that for companies that are not public, really. So our standard for whether you get counted as public or private these days is geared more towards, are you a fully SEC reporting company, as opposed to, does your stock trade somewhere, somehow? Because it can. And we're also seeing an uptick in companies wanting us to process private sales. It used to be in the old world that for us that would be a transfer of ownership and the sale would have taken place somewhere else. Maybe you and Blaine, came to an agreement and you handed over money and he handed over shares, and then you submit a transfer of ownership form and we do the transfer. But we're seeing more situations where companies want us to be able to process those transactions literally as sales and to produce a 1099, which we're able to do. So that's another bit of it's not really a plumbing fix. It requires in our systems kind of manually pushing things along a bit at points where we would normally have gotten something back from a broker-dealer on an automatic feed. And it's more of a specialized situation, so you'll have companies that are doing buybacks or companies that have a good deal of insider or employee participation, and they want to, essentially, they'll hold the money in escrow. People agree that they want the sale. They give us a price to process the sales at, and we put those through as sales, and the company provides the funding for it. So that's also been an interesting twist in terms of it's not something we're not capable of supporting, but it's not something we thought we would be supporting 5 years ago. Other things that we're looking into development for is more investor relations communications for privately held companies, because with the publicly held companies, there are investor webcasts and podcasts and all kinds of public information that's available on websites. Private companies don't always have that similar type of information. So we're looking into being able to provide more robust communication services and a secure login where investors can go and get more detailed communication than simply looking at how many shares they own and what the value of the shares are. Supporting video and different types of quarterly statements or pictures and fun stuff like that. So, yes.
Joan, this is intended as a softball because I think it's a chance to answer a question that I get asked all the time.
Okay.
Which is when an issuer says, hey, I'm working with a broker-dealer, the broker-dealer has a clearing firm, they're holding most of the shares in street name, why do I still need a TA? And I go through the litany of all the things a transfer agent does, some of which you just covered, but if you could sort of give the bullet of why does an issuer, particularly under, say, a Regulation A or Regulation D offering, really still need a transfer agent? Why are they going to benefit from that, even if they're working with a clearing broker or
if they're working with a clearing broker, you don't see very many situations where 100% of shares are held in street name. In fact, I can't think of one. So if 100% of shares are not held in street name, when there is a transfer of ownership, when you have securities that involve restrictions, like Regulation CF offerings all have a 1-year restriction, Reg D offerings have at least a 1-year restriction, then to perform a legal transfer is a lovely specialized process with lots of rules, some of them state by state, that most clearing brokers would have no involvement in. So when it comes time to do a transfer, you want to make sure that that title has been legally transferred, because it is a title. It's as if you're selling a car, and if If that title is not transferred appropriately, then you might be out both a car and money. And that's not a good position for anyone to be in. And also from a regulatory standpoint, you can keep books and records yourself. I can tell you I've seen some very messy stuff come through our doors from people that are doing that, which is why when people come through the doors, we require certain certification from the company, like, yes, you have X many shares, and this is what's on the books, and this is who owns what. And we take that as is. We do sometimes end up doing some cleanup because sometimes the issuer comes back and says, I forgot Richard really has an extra 3,000 shares that we hadn't accounted for because I had a pile of stuff with sticky notes on it in my desk drawer. And that's oftentimes what happens. I'm sure you've seen people come through the door with the shoebox with all the icky stuff in it. I like to refer to a very large, what's no longer a startup these days, but a very large company that was a unicorn. It took us a year to clean up their books and records before they went public, because entrepreneurs and emerging growth companies are focused on their business. They're not necessarily focused on the nuts and bolts of who owns what, but you get further down the line and suddenly whether Blaine owns 1,000 shares or 10,000 shares can become a very valuable point and a point of dispute. So I'm finding that for us, this is a really good business opportunity because companies don't want to deal with this sort of thing. So the example that I give people is if you're the founder of a company and you've issued 1 million shares and a lot of it's friends, family, and fools that invested with you to begin with, if you're not staying on top of keeping those records up to date, it would make a whole lot of sense for you to hand it over to someone that actually does that for a living while you run your own business, because your investors are important to you, and it's personal and proprietary and confidential information. It's also a legal right of ownership. So you're probably not going to hand that information over to the shipping clerk to look after, even though you might like to. So it would be better to hand it off to someone like us that does this for a living, and we're regulated by the SEC, and we do a pretty good job at what we do. And it's a safer place. So.